Hello. Where are you at? Okay, there we go. Okay, hello, welcome to the video. This is our first video on Bitcoin and the macro analysis of Bitcoin. These bands here go over Bitcoin for the past decade and shows their the statistical distribution over the past decade here. This would be, currently this is one standard deviation, this is no deviation, 0, and -1. Currently we are just under the value area for the decade. Let's go over these. The price of 41.2k would be 3 standard deviations away from mean. 35k is 2. 29.2k is 1 standard deviation. Fair price ranging at 23k. 1 standard deviation under fair would be, what was that, about 17k. 2 standard deviations under fair would be about 11k. 3 standard deviations under would be 5k. So with all of that explained and said, we shall dip further into the analysis part. We laid the foundation for this. So in the longer term view, we went too far from mean here, led to a correction. So now we're just under value, so we're looking for longer term buyers in the auction. This is an auction process. Longer term buyers in the auction process to buy under the purchasing trend here, which is 17.1k. So if we're expecting a bottom, it's not likely to be near here or now, especially given the way that the Fed is continuing to crunch on liquidity. I mean, because all Bitcoin really is, to put it simply, is an indicator of how much liquidity is in the system. I mean, what led to the run up here was all of the stimulus, all the additional expansion in M2 supply. With that said, Bitcoin is still viewed as a risk asset. So in times like these, while the Fed is pulling down on liquidity, it's not likely that risk assets will go up in value, because it's a time in which there's not, the liquidity is getting sucked up. The assets that are most affected are assets furthest out on the risk spectrum. The closest to the safe side of an investment would be bonds. I mean, if you're buying a bond, it's from the government and they'll assure you, I'll bet the rates are low, at least you're not going to lose as far as capital preservation standpoint. I'm curious at which point here in this cycle that I think I think around this price was when the Terra Luna debacle occurred. But okay, we're getting we're striving away from where we're headed. But if we do see a bottom or some sort of pivot, it would likely to be lower in these ranges here, because given the way that I've seen on the Fed tracker, it would be likely that we would see a reversal around these points here. But it's not a definitely not a bad spot to DCA. I mean, if you're under the value trend for the past decade, it's not a bad buy. I mean, you could, I mean, like even to the extent of I was delaying putting this in place. All right. Before we get to that place, all right. So if we do potentially see a reversal, it would likely be around here, the 2 standard deviations, which represents 95% of the data. 1 standard deviation represents 68 point something percent, and 3 standard deviations would be 99.9 something percent. And the further out you get from 3, the more minuscule the difference makes. But I digress. So yeah, if we potentially do see a pivot here, it would likely be around mid next year, March, June. I think on the Fed tracker, it said something to the tune of 25%, 25% chance of an ease or no hike, no rate change, meaning there's at least some stability in the liquidity for assets as a whole. Which, I mean, if there's more liquidity, that's more potential investment. Okay, so we established those points. Even say to the extent if you were, okay, here we go. So this is the logarithmic growth curve. They essentially assert that if the logarithmic trend as a whole follows, where price will correct to. I mean, yellow is value, green are discounts, red is your overpriced zones, overvalue. So it's projecting at the low end. At the end of 23, we would end up around 96,000. There we go. Yeah, so it's estimating at median it would be the low end projection would be 26,000, something like that. Then to the median range would be something to the extent of 192K. Higher end range 380K. And this is the predictions for the end of 2023. 2024. So if you were to DCA into these price points, it would be very rewarding in the long scheme of things. I don't want to project too far out into the future here, but this is just general idea and gist. Hope you enjoyed the video. If you have any suggestions or comments, please feel free to leave them.